Ivy, welcome back to the show. You've been warning for a few months now of a turn in the housing market. Is this sort of boom lasting longer than you expected?
Actually, yes, Sarah, it is. I think that part of it is really given the backdrop of the fundamentals being so strong. We also have a significant acceleration in non-primary buyers, investors. So if you look at the existing home report today, the cash buyers were up 27%, while those getting a mortgage were down 13%. And what the NAR does is they sample realtors and say how many investors separately are buying, and that was up 22% year over year, up from the prior month of 17%, and the prior month before that 15%. So, today it's very difficult for primary buyers to compete with cash buyers, but yet we don't really know if affordability is challenged as much on those entry-level buyers, which are down year over year 20%, because we can't really ascertain, given that the investors are scooping up all the homes faster than they are. And just to keep one other stat, and then I'll let you go, Sarah, but luxury sales up over above 1 million are really strong, up 39%. So it's quite an interesting dynamic. But investors, we don't know what's going to slow down their interest in an inflationary environment. It's a great place to hide.
Yeah, I was just going to ask what changes the dynamic, because we are starting to get rising mortgage rates to meaningfully higher levels. And I wonder at what point you start to see a turn in sales when that happens. We've seen it in the home builder stocks.
Well, you certainly have, with 6.5 million existing home sales and inventory, as you pointed out, down, nearly 20% year over year to a new record low. The velocity of how fast the inventory is turning, we hit an all-time record, nearly 60%, which is triple the historic trend line. And so I don't know what's going to change the investors' appetite, but there's a pipeline of new construction that's significant. The backlogs of single family right now is at 2006 highs and is up over nearly 40% year over year. But those homes just aren't getting completed, Sarah, because of all the supply chain bottlenecks as fast as we would have expected, which is really mitigating the downturn or correction that we feared. But just lastly, when you think about mortgage rates, and today we're hovering close to 30-year fixed at 40%, about 70% of primary buyers, 70% of homeowners in the United States have a rate locked in below 4%. So what historically has happened, it just disincentivizes them to move, to give up that low cost that they've locked into. So we're not yet seeing the impact of rising rates. And I think it's clouded by the investors that are in the market, and certainly, second home buyers included in there. So I guess it's the only time with the supply coming will we really start to see if that supply starts to impact overall pressure. But as of right now, we still expect home prices in 2022 to rise, even though they were up nearly 20% in 21.